Autocallable income, the ticker symbol CAIE. We have taken a $100 billion market that's popular in the structured note space, a derivative income category, bringing it into the ETF landscape. So you're familiar with a lot of derivative income ETFs already. Those are all covered call strategies. Well, in the structured note space, the other half of that pie is auto calls. Advisors are using these every day. It's operationally inefficient, it's tax inefficient, and we've created the easy button for them.
So right now, as we're seeing this, I mean, what kind of potential does this type of ETF have?
Sure, so we trade an index on Schwab. Right now that index is paying about a 14.5% coupon. So you can think of an auto call like a bond whose coupon and par value are just tied to equity markets. It's a differentiated source of income rather than what you might do from a bond.
And we recently interviewed John Calamos, who is the king, right?
Yes,
derivatives,
absolutely.
And he did a lot of convertibles.
Yeah.
I mean, he did a lot of creating of some of this, right?
Oh, exactly. Yeah, John and I were talking the other day, and he said, you know, what you've built is really a reverse convertible, and he's not wrong. You know, we're the largest converts manager in the country. So John was very familiar with the structure that we did. The original auto call was a reverse convertible. We've taken that into the future, and we're delivering that type of structure in the ETF wrapper.
He must be really excited about this. At the same time, something that we've talked about recently with the Calamos team, John Kadunas has been on with us. Tell me about Bitcoin, because you have different products for how much risk you want to take in Bitcoin.
Sure.
You make money on the upside, but you're protected on the downside. You have something you could tell us about that.
Yeah, every quarter we launch a new suite of protected Bitcoin ETFs. So July 8th, we launched our new suite of those products. You can now get Bitcoin exposure, a $2 trillion asset. It's the second largest commodity in the world. You can get that with the level of risk that you want. 0% downside, 10% downside, or 20% downside. So CBTY is our 20% downside risk product, or 80% protection. You can now tie that to the price of Bitcoin and get about 40 to 50% upside to Bitcoin. So the simple story is we've mapped Bitcoin to the traditional portfolio now. Maybe you're swapping equities for the 20. Maybe you're swapping gold for the 90% protection, or your safe money for the zero floor.
With Bitcoin at record highs in the last 24 hours, you must be getting a lot of calls for, you know, the FOMO gang.
Absolutely.
Who said, oh, I knew I should have bought that at 60,000 or something, but at the same time they're fearful. So this kind of opportunity with these different realms gives you more risk or less risk if you want to protect your portfolio more?
Yeah, Bitcoin has, you know, a lot of peaks and valleys. It's very volatile. There's been times you can buy in toward, you know, a big drawdown, times to buy in at the top. A protected version can smooth out that ride so that you don't have to try to time your entry.
And you also have there's so many ways to invest at Calamos Investments. I mean, you generally are mostly positive there. I mean, you're not bearish on the market, right?
Sure. Yeah, long-term positive, you know, in the equity markets, definitely.
But, you know, I feel like each time I speak with you folks, you're more about setting up a portfolio with a strategy. Is that right?
Sure. Yeah, I think a lot of advisors are moving from the 60-40 portfolio to more of a 50-30-20, you know, where that 20 bucket is more alts. Calamos is squarely positioned for that alternatives bucket.
Right.
You know, we look at products like CPSL as a laddered, principally protected equity product. So for folks like retirees, you know, that are coming out of their accumulation stage into retirement, those folks have got to outpace inflation over time. But the only way to really do that well is to tie yourself to the equity markets. Historically, that's been risky. So now we give them opportunities to tie themselves to the equity markets, outpace inflation, but not have all the volatility.
So CPSL, this structured ETF, does it mimic a certain index, or does it have more or less exposure to large caps or techs? Because this is a big one for Calamos,
sure,
right?
This is just tied to the S&P 500. You get laddered exposure up to a cap rate with no downside risk over those one-year outcome periods. So this is a product that's, you know, very steady, gives you some upside exposure that's greater than the risk-free rate or greater than inflation with no downside risk.
Are you talking a lot of just about all the topics, you know, tariffs, inflation? We'll get CPI next week.
Sure.
You know, is there a big picture thought for this year or the back half of this year, what the Fed may or may not do? You know, when you talk about the markets, what's that answer?
Yeah, we saw the big beautiful bill go into law around
Right.
July 4th, and so I think that could apply some relief to the markets and allow them to go up. But then
Yeah.
on the backside, you've got tariff risk, which could be short-term inflationary. So I think the idea is those two things might balance themselves out. But I think long term, we're bullish on equity markets. So our encouragement is to stay invested in the market, but do it in a risk-managed way.
All right. Well, it's always nice to see you, Matt. Thank you so much for being here, and the whole Calamos Investments team. Always a pleasure to have you on and give us the perspective and new products that you bring that help investors.
Oh, thank you.
Nice to see you. Matt Kaufman, head of ETFs at Calamos Investments.